When you're looking at the monthly time frame, what are you looking at? And then how often are you looking at the monthly time frame? Because that's exactly what we're going to be talking about today. How to find trades using top-down analysis from the monthly, weekly, and daily time frame. Now, the reason why this is very important is because I see a lot of people looking at monthly time frames, but they look at the monthly time frame too much, in my personal opinion. And so when I ask, well, how often do you look at the monthly time frame? They say, well, every week. Now, I want you guys to keep in mind that the monthly candlestick, it takes 21 to 22 trading days or business days to form. And so exactly what are you looking at the monthly time frame to make it a reason why you got to keep coming back? I want y'all to start questioning that, because I'm going to show you guys how to ask the right questions to get the right answers that you're looking for on this monthly time frame, weekly time frame, daily time frame. So let's go ahead and let's get into it. Now, we're here on the monthly time frame on the dollar index. And if you don't know what the dollar index is, it is an index and it measures the strength of the United States dollar. And I like to use this when trading major currency pairs. So I'm going to be using this index, and then we're going to be talking about the Australian dollar, United States dollar in today's video. So when you're on the monthly time frame, what's the first thing that you do? Like, what comes to mind? I want you to picture yourself, or maybe you are at your computer, but picture yourself being at your computer and you get to this time frame. You're looking for something. What are you looking for? I'm looking to see how the previous month's candle closed. So right now I'm going to zoom in. We just got out of September. I need to know how this candle closed. So as you guys can see, it closed bullish. But not only the fact that it closed bullish, what did it actually do? So I can see that where price opened was at a 108.84 or $108.84. The lowest that it went was around $107.68. The highest that price went was $114.79. And then where price closed was at $112.12, which is where October's candlestick opened. So I'm seeing that we had an increase in price for this month. Increase is an important word. So the next thing I'm going to look at is how has price moved over the past few months, not the past few years, not 10 years, 2 years, 5. That doesn't matter. What matters is what's going on the past few months. Have there been fluctuations on this time frame? What's been the flow of price, or basically the trend of price? And so if I just look at the last few months where price closed, you guys can see that it closed at 104 and then 105 and then 108 and now 112. So every month for the last few months, we've had increases. So since I'm using the word increase, this lets me know that buyers have pushed this market up, or some type of fundamental catalyst or economical news or data or the events in the United States has pushed the dollar up. So I can say that this index is in an uptrend, which means I want to look for potential buying opportunities. Okay. So as I'm noticing this, I'm going to also ask myself, will October be a bullish month? And if October is a bullish month, how would that look? This is where the analysis part comes into play, but not on this time frame, because I don't have any fluctuations or a place where I would want to put my estimations on. So I need to drop down in time frames to find not the trend, because when the trend is up, but to find an entry point. So I'm going to show you guys how that looks. But first, always notice how has price closed the previous month or months, not year. And then you're going to ask yourself, am I the buyer or the seller? If I was to actually trade this index, I would be the buyer. And once that comes out of my mouth, this is now where I drop down in time frames to find my buying opportunity. So let's go look at it here. Now we are on the weekly time frame. And what I'm doing on this weekly time frame is I'm looking for the actual fluctuations that I could not see on the monthly time frame. You as the trader, you are building, you are researching a reason to want to take action, or you're building a reason to not take action. This is where patience comes in at. So when we are looking here on the weekly time frame, we can actually see the highs and the lows. We can see the high here at 109. the higher low, the higher high at 110, the higher low, the higher high at 114s. And so we're actually able to see the flow of price now, where we didn't see the flow of price on the monthly time frame, because the monthly time frame are just big candlesticks, where now those candlesticks are now broken down on the weekly time frame. So now I can say, okay, let me build out the analysis. I have my higher highs and my higher lows. And now I can figure out where I want price to go and where I don't want price to go. So if this is a true uptrend, which it is, because we can visually see it, I don't want price to pass 107.679s. And if price is to continue up, just like it has from August and September and October, maybe potentially price could even pass 114.78. And now we're going to have a new high, and the dollar keeps getting stronger because it's been strong for this year. So while in my mind would I think that price might go down, I don't have that thought. I don't have the thought that the sellers could come into the market and reverse the strength of the dollar, not unless we pass 107.679. But because we're not there, I'm going to keep looking for buying opportunities. This is where now you're going to place your structure after you identify that you're the buyer, how the trend looks by identifying the fluctuations like we did here, and where the sellers could push price down because now the cycle is a retracement. We're pulling back. Where will price stop pulling back and continue the bullish trend or the bullish price movement up to continue the strength of the dollar? So I have that located here on the weekly time frame. Okay. So if price comes into the area of between 110s and 107s and stays above 107.679, I can say, hey, somewhere in this range or in this area of price could potentially pull back and then go back up. So now I'm going to ask myself, because I've located my highest point at 114, I've located where I don't want price to go, which is around $107.69. I now have my entry point. Can the analysis stop here? Do I have to keep going further? The answer is yes and no, because if this is all you need, you don't have to keep analyzing this. And here's what I mean. If we drop down to the daily time frame, the entry is already set up. Once you place your structure on your price chart, you already know how you want to enter the trade. So here, for how I would trade this, if I was trading it, I would set a pending order. That way it's out of sight, out of mind for me. So if price, and the keyword is if price can pull back to my estimation zone, I already have where I would enter the trade on the dollar index. I already have my stop loss. I already have my take profit, and my risk to reward will be at 1.73. And so I like these odds. But how does that relate to what I actually trade? So now I'm going to step over to AUDUSD, or the Australian dollar, United States dollar. So now I'm just going to go ahead and follow the same process that I just did on the dollar index. So when it comes to analyzing a currency pair, you still want to use the same flow. You don't want to change it at all. So as I'm looking at this, I'm going to look to see how September's monthly candlestick closed. The candlestick closed very, very bearish. So in my mind, now I'm asking myself, well, because it closed bearish, how have the last previous months closed as well? I don't need the whole price chart, just a few months. So I can see here in August, price closed bearish, but then price closed bullish, but then price closed bearish for the previous month. What this lets me know is that there is a flow that's happening on a lower time frame that I can't really see here on a higher time frame, on the monthly time frame, because they just look like red, green, red candlesticks, right? Or in my case, peach, green, right? However, the flow of price is still continuing down. So the keyword is down because there's been decreases in price, which means I want to be the seller. But sell from where is the question. So this is where I'm going to drop down to find the answer that I'm looking for. So what I'm doing now is I am getting ready to operate in a certain range or realm of time frame. So when you're analyzing the monthly, weekly, daily time frame, I know the question will come up, well, what time frame do you enter on? Is it the daily, the 4 hour, like what is it? So think about it like this. You have your higher time frames, your medium term time frames, which is the daily, the 4 hour, or anything in between. And then you have your lower time frames, your 4 hour, your 1 hour, 15 minutes, 5 minutes. What you want to do is operate with your analysis. What you want to do is mesh those time frames together. So you have your higher time frames you stay consistent on, your mid-range time frames you stay consistent on, and your lower time frames you stay consistent on. Because if you operate out of the realm of those time frames, your risk to rewards are going to be extreme, where your stop loss could be too big and now you don't have a favorable risk to reward. Or you could have a favorable risk to reward but get stopped out before you take profit because you operated in too of a high time frame. As we're looking at the weekly time frames, now you guys can see, like when I was talking about the green candlestick and the red candlestick and the green candlestick, we see those fluctuations here, because keep in mind what you see in a lower time frame creates the bigger candlesticks on a higher time frame. And so we can see the lower high, lower low, lower high, and now we're around here where price has created a lower low, meaning price has moved past 0.66799. And this is why I say that I am the seller. The question is, where will I sell from based on the higher time frames information? So overall, this will be a long-term trade. Overall, price, if it starts to pull back, could pull back to 0.68977 before I even think about wanting to place a trade. But I want price to stay below the last lower high at 0.71379. That way I can keep being the seller of this currency pair. But the question is, how do we get there? Because we're nowhere near what I would want to take a trade. So this is where I would say you have to stay patient and wait for the setup to come to you. But how would that look? Dropping down to the daily time frame, what we're going to see here is more candlesticks, a few more fluctuations, right? But right now what I want to do is also gather my risk to reward of the long-term trade. So if I set a pending order where I would want to enter the trade, and if I put the stop loss where I wanted it to go, I put my take profit where I want it to go, you will see that I have a 2.21 risk to reward. I could risk 240 pips to gain 532 pips. But what does this mean? What this means is that this is a long-term trade, which means that if price does begin to pull back, I could counter trend trade this, meaning that I'm going to be trading against the trend, which is a little bit more risky. But if I'm not trading a lot of currency pairs and I don't want to sit on my hands, this could work out in my favor. As long as I or you have the belief that price could get to where you want to enter your next long-term trade. Or you could just sit on your hands and wait for price to get there. That way you're not putting too much risk on your account and your mindset. Now, if we look at the risk to reward, as you guys can see, price has a way to pull back. So we're going to have to exercise patience. And when price gets to where we want it to go, you have to be okay with risking 240 pips to gain 532 as the swing trader, because I'm going to be wanting to enter this on a daily time frame. But if you do not have the patience and the courage to sit in a trade such as this, which if I'm risking 240 pips and gaining 532 pips, it could take some time for me to make those 532 pips, which means I will be sitting in this trade for a few weeks. If you've got the patience to do that, I say go for it, because that's building your account passively to where you don't have to keep showing up to place a trade. And this is why understanding your trading style is very important, whether you're a day trader or a swing trader. And with me being a swing trader, I'm okay with this risk to reward. If you're not okay with this risk to reward and you want quicker trades, this is where you being a day trader or a short-term swing trader will come into play. And so you got to bridge your time frames together. If you want shorter trades, look for trades on lower time frames. If you want mid-level swing trades where you're holding for less than a week, look at your daily and 4-hour time frame and find what works for you between those times. And as you can see, the higher in time frames you analyze, the more your stop loss will be, but the more your take profit and pips would be as well. So this is why operating within a certain range matters to the way you trade. So the question would be, how would I trade this? Well, for one, I'm on my hands. So I've been on my hands in this currency pair ever since last week. I've not touched this currency pair for a trade. So it was a quiet week last week with me trading this particular currency pair. Now, as you guys can see, price is kind of moving sideways. Last night, one of my students asked, Shaquan, do you see price as ranging? Now, so I'm going to give it another day or so to say that price is ranging, because two things could be true. This candlestick right here that formed September 28th is a hammer. And I call this a momentum stopper, because it could stop the momentum of price from continuing down and give us the pullback that we need for price to continue up. Or it could say, hey, even though you know me as the momentum stopper, I may not want to stop my momentum here. I may want to keep going down. And so this is why I say that I'm going to have the patience to sit on my hands right now to see where price wants to go. If price begins to pull back, this is where I can go down to my lower time frame and maybe start to trade the retracing trend that price could make on this time frame and maybe catch one trade or two. However, if price continues to go down, I can catch the current trend continuation move going into October, especially because price is still bearish. So this is why you got to learn as a trader when to sit on your hands and not do anything, and when it's time to actually move. But this is the power of top-down analysis. So all you're doing when you're looking at the monthly time frame and performing top-down analysis, all you're really doing is you're asking yourself, where is price currently? And you're only doing this once a month, because the monthly time frame tells you to show up monthly. Remember, guys, that time frames and their time periods tell you how often you need to be showing up. Don't show up all the time for a daily time frame. It just says, hey, I close once a day. You don't need to look at me every 5 minutes, right? The 4 hours says, hey, I close every 4 hours. You don't need to look at me every hour. You're not going to get anything out of that, and it's wasted time and energy. But what you're also doing when you look at a monthly time frame and using top-down analysis, not only are you asking, hey, where is price currently, but you're also researching and building your analysis to say, this is where price can go, and this is where I can enter the trade, and this is what my risk reward and profitability looks like. So I pray that you guys enjoyed this video, and if you did, be sure to subscribe and give it a thumbs up. And if you say, hey, you know what, Shaquan, I'm not opposed to working with you. I would actually like to work with you to view how you look at more currency pairs in your time frames just like this using your TMP system. If that is something that you would like to do, make sure you click the link below to get a free 30-minute video call with me where we see if we're a good fit to work together, and then I add you into my community after you work with me. For personally, you can hear my voice, you can see my face, and I walk you through my technique step by step. So if this is you, make sure you book a free discovery call. Be safe trading this week because it is non-farm payrolls, and I'll see you guys in the future. Y'all be blessed.